Hey, everybody. I think you're getting a little like early preview, but if you weren't, welcome. Where's the opportunity amid all the volatility? Hey, everyone. I'm Maggie Lake, and today I'm talking markets with Tommy Thornton, founder of Hedge Fund Telemetry. Hey, Tommy, how are you?
I'm good. I'm good. Great to see you. And I always seem to pick these days. I don't know. Maybe the market picks the days, but ugly day.
I know
Ugly.
it was an ugly day. And for those in
Yeah.
case you're away from your desks and you need an update, everyone, it's not a picture that anybody really wants to look at, but it started out, with a decent sentiment. I think it's fair to say, or at least some gains, right? At least there was some green on the screen, and we've just really accelerated the selling here into the close, and we're looking at S&P down about 1.75%, but the Nasdaq down 2.5%. The Russell accelerating, and that is down with losses of over 3%. So it certainly seemed like it just all kind of fell apart in the afternoon. There's a lot of talk about tariffs going into effect Tuesday as a potential catalyst. But what's your sense of what's driving this selling, Tommy? I mean, I thought I had heard people say, that was telegraphed and most of that priced in. What's your sense of what's happening here?
Well, remember we talked, I think it was right after the election, and I said, I don't think people remember how volatile the Trump tweets and social media posts and how Trump 1.0, how volatile it was for the markets. And we're getting a real taste of that, especially with him really pushing tariffs hard. He has a lot of support among Republicans and world leaders, tech giants, to go and mandate, put his mandate out there as hard as possible. And usually presidents do that. New terms, they come in hard and they want to get stuff done before they can't. And I think Trump is he's doing what he told everybody he was going to do, and it's it's really clear the markets don't like tariffs, and I think tariffs create a lot of confusion for companies, for world leaders, and we're seeing that. And one thing that Scott Bessent and Trump have said, they want the 10-year yield to be lower, and one way to do that is to allow the equity markets to fade and go lower, because people will move to bonds in a risk-off type manner, even though you still have a bit of stagflationary data that's coming out. The ISM data came out today, basically in line. Jobs were lower, but prices paid were higher. So one thing that Fed Chair Powell was stumped on last summer when he was asked about stagflation. What's the Fed's plan for stagflation? And he really didn't have a great answer. And that's partly because the Fed is in a box or painted themselves into a corner when it does come to stagflation, because if growth is slowing and the Atlanta Fed GDP data is looking weak, a negative number for GDP for Q1, and you still have prices paid higher, the labor market's still real strong. Now we have a jobs data coming out on Friday. I think you're going to have some noise, perhaps with the California fires. That could filter in. But I think that strong data is not the friend of the market right now,
Mm.
especially when it comes to inflation, because I think a lot of people, and I talk to Julian Brigden all the time, and he's still in the camp, as I am, that inflation is going to remain sticky. I mean, Trump said that he's going to lower prices. Lower prices, you still have high prices out there, and it's going to take time, and that's a demand destruction type thing for prices to go down.
Yeah, well, that's the thing, isn't it? And it's interesting. So much attention on the stock market. Of course, when you see losses like this, it's going to be all over the headlines tonight. Dow down
Yep.
800 points, almost 1,000 points. But the yields on the 10-year has had a dramatic move. That's kind of looks like it's headed to 4%, 4.15%. That's a big move. Is that happening because there's excitement about fiscal discipline, or is this telegraphing that things are slowing down and they're concerned about demand destruction, bond investors, and a possible recession?
Well, I'm all for seeing the the government shrink themselves a bit and slow the spending, but I still see it as out of control. And even with cutting some of the smaller things that have been mentioned, some of there's a lot of things that you can look in the government what they spend money on, and it's nonsense. But it really comes down to entitlements, and Trump said that he's not going to touch entitlements, and that's really the bulk. Look, if you're going to solve the Ukraine-Russia war, you're going to have less spending on defense. That's positive. That will help. Defense is huge. But the national debt is going up $1 trillion every quarter. And that is going to be difficult to turn, especially when you have refunding, a big refunding amount that Scott Bessent has to deal with in 2025. So I think it's a little of both. I think there's some fiscal discipline that's the hope out there. Still too early to tell, but it also could be a slowdown. And again, I think we're stagflationary environment. It might be the catchphrase for 2025.
Yeah, is stagflation, first of all, like how do you think about that from an investment point of view? I mean, if you're anticipating that, are you already making decisions about what you're holding based on that? Or are you just being really nimble and keeping everything super short term?
My whole strategy this year has been very nimble. I've held a larger amount of cash than usual, and the reasoning for that, it's not because I don't have conviction on the long or short side. It's just I don't have conviction that something's going to last more than 4 days. And today was a pretty good example. Actually, go back last week, we were looking at new lows on the S&P and NASDAQ. And then late on Friday, the market ripped higher. I happened to be off the desk. I left a little early. And yesterday, I posted my weekly note and said it's been a relatively quiet weekend of market news. And then all of a sudden, Trump tweeted out of the crypto news, and everything went bonkers on the upside. And all that faded today. And I think there's a lot of people that are skeptical about why do we need to borrow money to buy crypto assets for some strategic initiative. I think that that's not necessarily strategic, and it's not really going to move the needle if we put $5 billion in crypto. I think it's just going to benefit those that are in crypto. But seeing the reversal today was, even me that I normally don't get too shocked, that was pretty shocking to see the reversal of, I mean, Bitcoin, was down like 9%. It was up yesterday, right back down. And I think Bitcoin could go lower. We have DeMark signals that did pretty well calling the recent top. And we have them on the downside that are still counting down. So I still see risk there. And then when you have Michael Saylor trying to corner the market as the largest holder, I think, of Bitcoin, there's liquidity issues because he's enabled all that with debt. So I think it's precarious. But I think right now the best thing, I like the volatility. I do better in volatility. I do terrible in up to the right type markets, and nobody really needs to watch any of us if the markets are doing that and you have 7 stocks that are leading everything higher. But you had Nvidia getting hit. I think I'm looking at my screen right now. You only have Meta up on the year, and it's up 11.8%. And you now have Nvidia down 15% off for the year. That's meaningful considering the market cap of these big stocks, and especially Nvidia. Each point for Nvidia is $25 billion. So you could lose $100 billion on a 4-point move. That's fairly substantial, and a lot of market cap's been lost off the highs.
Yeah, and that I always worry because that's a stock that so many people hold in their portfolio, maybe in multiple ways. And so when you're talking about sentiment and people feeling good about the future, they were looking at those statements, and that has changed. And I just wonder, what that does to sentiment. Steve is asking, hey, everybody in the chat. We have a lot of folks in here today,
Hey,
including
everyone.
Blind Squirrel. Hey, great to see you. Ralph is back. Christopher is saying he was waiting for a chainsaw to the market. He was worried about that. It seems to be catching up with his point of view. And to be fair, Christopher also saying your cautious point of view. Because last time we talked, Tom, you were concerned about a lot of these things. And the market seems like it's catching up to that as
Yeah. When did
well.
we talk? Was it December or January?
It was December, I believe, because yes, and it was just like a tough time. You were just disappointed about the performance, and the markets were very difficult, and didn't make sense
Well,
in a lot of
the,
ways
the
to you.
problem
But
the problem that I had back then is that the concentration with what you just mentioned, that people are so concentrated into some of these mega cap names, and they may not realize it if they're long spies and Qs because they're 30+% of those indexes and ETFs. So it works great on the upside, but on the downside, it gets a little hairier. And you have all these levered funds out there, and the assets that have gravitated to levered ETFs. I'm friends with Matthew Tuttle, and he has all a bunch of crazy ETFs that are levered, MicroStrategy, and he's doing one I saw today, the Donald Trump social media DJT double levered. I'm like, it's just a formula, and it's not hard to put together, but it's like people will lever up in markets, and I think that's a real risk. You've had really high leverage, and that's according to Interactive Brokers. Thomas Petterfee, he said margin has never been higher, and they're pretty good about margin. I know that because I have a client. They like to tell you if you're getting to the limits. But the bottom line is people have been all in. People in the retail got all in even more so after Trump was inaugurated. And I think that's a risk, because if you have all these mega cap names and the indices higher, nothing motivates people more than seeing red on their screens to start to sell and take some money off the table. And that is unfortunately the process that happens time after time. It just, that's how a top is formed. And I don't know if tomorrow we're going to bounce. We've seen the escalator up, elevator down type market. And it really is difficult for corporations to make decisions, for portfolio managers like myself to make decisions. And so I just don't want to, if you came in today and you saw the futures were up a moderate amount, and you said, I think we're going to, get in there and buy some things, and you finish the day down on everything you bought. And breadth was horrible today. It's very difficult. It's a very difficult market, and don't let anybody anywhere tell you that it's not. It's very difficult, long and short.
yeah, well, and that's a great point. It's not like someone's winning on this. We heard a lot of people talking about the Mag 7 trade over, the rotation out of Mag 7 has begun, and welcoming it because of the concentration, and indicating
Right.
this could be a healthy process, right? And maybe you move into things like whatever the recommendation would be. We've heard a bunch of different ones in the last couple of weeks for people who've been on saying that on the show, but can we see a rotation? We didn't see that today. We're not seeing a rotation today. We're just seeing selling across the board. And
Yeah.
I wonder about that, and whether there's a little bit too much complacency about what a cascading sell-off. If there's a loss of confidence or a loss in sentiment, and so many people are sitting with those Mag 7 stocks in their portfolio, does it just hurt sentiment so broadly that it's just out of equities into cash?
That does happen. I'm looking at the Mag 7 index that I track, and it did hit a new low today, lower than Friday, and had an bearish engulfing day, which is not great. It's right at the 200 day. So I think that, look, I track market sentiment on Hedge Fund Telemetry. It's not oversold. It's not oversold by miles. And a lot of people will look at the other sentiment polls. I think this really is the best. We're starting to see a little bit of put buying come into the put call ratios. That's a positive sign for, you want to buy when everybody's buying puts. I mean, you want to buy the market when everybody's buying puts. It's like, oh, the house is on fire. Time to get insurance. It's too late. It's always, that's what I'm looking for, a spike in the put call ratio. But we're not there yet. And I think that we could see a move, perhaps, I don't know, I'm just going to throw it out there, 10 to 15% lower. I think 5,000 would be a nice starting place and really scare the market. I mean, the market has been in a bear market for fear, bottom line, for the last 2 years. People, the other day, everybody, market goes down and everybody's asking me, what do we buy? What do we buy? And markets, when there's fear involved, they don't want to buy. I've had times where I have said it's time to buy, and everybody just has a quietness to them where they don't want to buy. And you go back to March of 2020. I was talking to an investor today about it, and I said market sentiment got to 3% bulls. You had tons of exhaustion signals on the downside, buy signals, and nobody wanted to buy. And that was like a humongous buying opportunity. It's when nobody wants to buy is when you want to buy. Or the other is the trader with the face on the hand on the newspaper, or TV,
From the
face
three
on
of
the
them
hand,
still down at the exchange.
hand on the face. That's
Oh.
that indicator. That really is quality for technical analysis.
The sentiment, yeah.
But there's no more traders on the New York Stock Exchange anymore.
Somehow
It's
they
not
always still
Jim
get that
Cramer.
picture, amazingly, though. But you're right, there are very few.
Hand on the face.
So you're not hearing that. You're not hearing that level of fear. You're still asking people if they want to buy, including Steve in our chat said, "Did anyone buy today?" Case in point. I'm not, we got a lot of no's with this smart group.
Usually I get people that say, what can I short as well? And I have shorts in my portfolio that are doing okay and negating some of the carnage I have on the long side. I will say this, uranium stocks were murdered today. And I started buying them last week. They were already beat down really, really hard, but I like it as a theme for 2025. And I think nuclear power is going to be something really, really exciting, but it moves in at a slow pace. And everybody jammed into these higher, much, much higher because of the data centers and all that. But I like uranium stocks. I know everybody says, oh, those look terrible. And I'm like, I know. I have my friend Porter Collins and he's buying them. And I follow some of the smartest people and I've used my indicators and they're pretty beat up. So I like those. And it's hard, Maggie, because if you're on CNBC, they always want to talk about what's working. Oh, what's already worked. Well, that's like, I don't want to talk about what's already worked. I want to talk about when I'm planting in the ground and then it grows and then you pick the fruit. And we talked about Alibaba in December, and I've been long these, Alibaba and KWeb and FXI, and I had like a 60% gain in Alibaba. I've taken some of those off, and I had call spreads, and it was like a great trade. Now everybody on TV is talking about it, so it's like turn off the TV, only watch Maggie and all the fine guests that she has. That's it.
But to your point, Tommy, I think it is important. It's the same thing if you're sitting there thinking, should I buy crypto today because of the news? You had a huge move already, right? You don't want to be looking in the rearview mirror. You want to be trying to look ahead and trying to, you don't want to be the kind of last one in a crowded trade. And by the time it makes its way onto some of that programming, just be careful because it means the move has largely happened already, right?
Well, I'm sorry to interrupt you. The thing that I would say about crypto and a lot of these Mag 7 names, if you go back to after the election, the election, everything went crazy on the upside, from all the Mag 7 to crypto, Bitcoin. There are a lot of people, and then things went sideways for several months. and chopped around, and especially with Bitcoin. And I don't trade Bitcoin personally. I analyze it on my notes every single day. I said if you broke 90,000 on Bitcoin, that's a real chunk of people that are long up there, hoping that the Trump administration is going to go out and buy Bitcoin for strategic purposes or for whatever reason. But I think you have trapped buyers up there.
Mm.
And you have that in Mag 7, and you have a lot in NVIDIA higher. And if they don't go up, you're going to have, and if they bounce, you're going to have sellers that are going to say, I'll take some off. I don't need to, be there. So there's going to be resistance all the way up. And so that's a topping process, clearly on all of these assets right now. And listen, with crypto, what you're getting involved in. This is super high volatility. These are assets that I mean, some of them shouldn't exist, and I hopefully they don't one day. But honestly, if people are long these things much higher, and they don't make new highs, they're going to get tired and move on to the next thing, because that's how this market's worked. Oh, what's the next cool idea that's working? And I don't see any really cool ideas right now that are working. I have cool ideas that aren't working, but those aren't.
And I just want to make sure that this is such good advice. And it's not saying don't ever buy crypto, don't own crypto, anti-crypto. That's not what I hear you saying, Tommy. I hear you saying make sure you understand the way the market moves, the nature of the asset, who plays in that market, and just make sure that if you're going to do that, you're nimble enough to understand the time horizon you have to have in order to make sure that you're taking profits or making profits in the same way you would with a sort of, highly volatile, high risk, very narrative driven equity or some other asset. Like, that's what I hear you saying, just in case anybody gets.
Well, it's positioning. It's really positioning. And if you understand where people are, where they're positioned, and if they're positioned higher than you, and you have to understand that people will sell, and especially if things start to unwind a bit. And I mentioned Michael Saylor, and he has been vehemently saying Bitcoin could go down to 0 and I'm still okay. I maybe not 0, but I just think that his cost is around 66,000. If it starts to get a little closer there, I think you could see him feel some pressure. I'm not sure if he's going to sell. It's been under his cost basis in the past. He didn't sell, but there's a lot of leverage there. And if it does start to get slippery on the downside, you have a motivated seller that might, get stopped out of something. And crypto, listen, it's a market that people are only there to make money when it goes up. And maybe, there's smart shorts in this as well, obviously, but its number go up. There's no use for Fartcoin other than the entertainment of saying I was in Fartcoin or Dogecoin. The market caps on these are so high and elevated when there's no intrinsic value that poses a I want to say like an extraordinary risk if things start to unwind. I mean, you have some of these cryptos down more than 50%. Dogecoin was worth more than Apollo Global not too long ago, and it's down, I think, well over 50% off its high, and there's no value there.
Yeah.
I mean, I don't know. Maybe there is.
Yeah.
I'm open. If I start to buy crypto, it's probably the top. I just don't buy crypto. I analyze it, and I try to figure out some sort of valuation for it. And if I was buying any of them, I'd buy Bitcoin, obviously. But Ethereum, there are a lot of people that were touting Ethereum when it was well over 4,000. Triple lever it up, buy calls, do all this stuff, and it's cut in half. I don't need that in my portfolio. I can find an equity that can do that.
I can find an equity that can beat me up the same way. So this is a
Yeah.
great question. No one knows thyself is asking. Normally, when the market is in a downturn, Tommy will say upgrade to quality. What quality does Tommy see that's at a good value at these levels?
Okay. That's actually the best question. And I got something. I was talking to an institutional client today, and we were talking about what do we buy when things get oversold and done. You can buy a few things, but if you didn't own Microsoft, you didn't own Meta, and you didn't own Nvidia, and some of these really high quality, heavy cash rich companies, you buy those. And then you can buy some of the more, let's say, a little bit more risky type stuff. But if you could buy some of the best quality that you know are going to be there and be fine with earnings growth, I mean, most of them still have earnings growth. I think you're going to be okay. You want to upgrade to quality on real pullbacks. Market slams, you buy quality first, add a couple of the more gnarly stuff in there, but nothing overweight on this. I mean, this is a market of gamblers, and we live in a society of gamblers. And I don't think you want to be thinking, oh, I'm going to make my money back if I'm down 20% on one trade. I'm going to buy levered ETFs. I'm going to do it. Just think a little longer term, and usually it works out faster than you think, especially in this market because the bounces have been fairly substantial. So I think that's the best advice and best question right there. So buy good quality, buy good valuations, nothing overly cheap, but stuff that worked in the past and you see is surviving through. I can live with that. I can buy Exxon at 100. I'm fine there. I can buy, some of the top quality names and just layer into those and keep your sizing moderated. And I don't go over 5% on my weightings. And there's times like, oh, I'm in uranium. I've got 2% in one stock and 3% in an ETF. It's 5%. It's not going to kill me. And if you're wrong, and you have a fairly diverse, don't diversity is not buying 6 out of the 7 mag 7. It's buying several sectors and stuff like that. So
Yeah,
okay,
that's great advice. I'm interested you threw Microsoft in there because I think there's a concern that's kind of mixed in with the Mag 7 about the AI bubble kind of bursting. And is that over? And now the trend will shift elsewhere in this revolution, but maybe not from those sort of developers of those. Why is that on the list?
it's software. And I generally start looking at software first. And I'm not in Microsoft now, but I think that software companies, I mean, Meta's and Microsoft's Oracle, a few others. I've been sort of scoping Adobe recently. Not quite there yet, but software will probably benefit from the investments that they've made in the hardware. And I think is just sort of my view on the hardware aspect. I think that growth is probably going to start slowing for Nvidia. It was hyper growth, and now it's like super growth, and it's going to be good growth. And you're going to have one of the mega cap names come out and say, "Yeah, we're lowering our capex, or we're going to moderate our capex." I mean, they may not say it, but I have a feeling that capex levels was sort of an arms race. Oh, I'm going to do 50. No, I'm going to do 80. I'm going to do 90. That's kind of what we saw with some of the big, Meta, Microsoft. I mean, Apple's not even in AI. They're sort of, they may survive by not investing too much into AI.
Yeah,
But I
everyone,
still think,
what was seen as being really behind, I know people have wondered aloud if it wasn't just luckily, missed out on that, and maybe we'll be in a position to do
I
something
think
different.
Apple totally missed out on it. I mean, their phones are not cheap, and they just came out with a cheaper phone that's $200 less than the iPhone 16, and they're calling it the affordable phone, and it's more expensive than the previous cheaper phone. I don't think it's going to move the needle. I don't think they're doing well in China. They haven't been doing well, and it's not cheap. Stock trades at plus 30 times earnings. Solid, great company, but I just don't want to be a buyer at these levels. I am short a little. I will say that.
Is there a sector, Tommy, that you feel like just because no matter what, even if we're saying it's negative, there's just we still spend a lot of time talking about in the Mag 7 because so many people hold it and so many people are interested in it. Do you think there's a sector that is just so underappreciated or, has potential, it's just not sexy and no one's talking about it?
I mean, I'd like to buy utilities lower. I think there's going to be an infrastructure build there. But I'm not quite there with utilities yet. Tech. I mean, I'm looking at my screen over here, and it's not looking very pretty, and it's not oversold enough. And I mean, just industrials still look weak.
Well, because if the economy's weakening, you can sort of find a reason to hate everything.
I don't mind saying. I just don't have like a strong, belief that things are gonna get better. And if I think that the S&P can go to 5,000 or maybe less, I mean, it won't go there in one day. I mean, I don't think so, but you never know. I think that there'll be opportunities, and it's just I don't really see anything right now. And I hate to say that because like that's what we're paid to do. We're paid to find opportunities. But look, I could have shorted stuff on Friday and got run over, and then it's right back down today, and it's just challenging. I mean, I'm not into healthcare, so I can't really speak. It's not something I focus on.
Are you looking at Europe? Because you were playing in China before. You're looking at Europe. Some people, I mean, defense stocks there did well. Some people think that looks like a value, but no.
No, I get the Europe trade, but I think that I'm getting a lot of DeMark exhaustion signals in Europe right now. A lot of the indices are overbought. I'm not chasing that. And like the Bank of America data came out where the fund flows, there's tons of money that came into Europe in the last few weeks. A little late, I would say. And that's the same thing that happened in China with the first move up that we saw months ago. Money poured in and then they got trapped. And again, it just goes back to positioning. And I think people will chase performance. And that's the worst thing you can do. So I'm trying to figure out what I like. Again, tech looks pretty ugly, and semis
like cash. That's what it sounds like.
Yeah, I mean, look, I'm not quite there with bonds as well. I mean, I kind of think we're sort of at levels where I think the bonds could sell off again, especially if we get some stronger data. And I think that's still possible.
What about commodities? Except for you mentioned uranium. Are you looking at other areas of the commodity?
Well, I do a commodity note on weekends. And the week before last, we had DeMark sell countdowns on the daily and weekly. And I'd been monitoring those. And I said, when these, and commodities haven't been great for the last year, but they were starting to do well. And then you had all the people that said, "Oh, I love commodities here and gold," and those just broke down too. So I mean, commodities didn't have a terrible day, partly led by metals, but grains look terrible. Crude still has downside. I mean, I look at crude, and I like trading the energy markets a lot, and I still see downside DeMark sell count or countdowns on the downside that are incomplete. So when those hit the magic 13s, I'm going to be a buyer of those. And they were like on day 8, day 9 of 13. So maybe next week we'll start to get some signals, and then we can start legging into them. I'm not crazy about gold, but it's very resilient, and it also had exhaustion signals at the high. But it's it's been the most resilient of all the commodities for the last year and a half. And you just see these moderate small pullbacks, and it keeps going up. But I'm I'm not a gold guy.
Mm,
There are gold people, which we know those people, but they never sell.
yeah.
And they could say, well, why should I sell? It's at near new highs. You're right, but it can go through a bear market as well. And when markets really get ugly, there's no place to hide other than cash. No place. Everything gets hit. You're going to have metals get hit. Commodities are going to get smacked. Equities, even maybe bonds will get hit. And we've seen that before. And then when rates spike and everything else goes crazy, that could be the recipe for disaster. And crypto too. I mean, remember the carry trade in the summer when it was unwound? It really exposed a lot of the positioning that was very concentrated, because you had Nvidia. I think it went to like 90 from 130, and Apple got hit. It just showed like all the concentration. Crypto was absolutely murdered. I mean, I had a price target on Bitcoin of 50,000, and it absolutely ticked right there, and bounced off of that. And luck, right? Let's just call it that. But nothing really is survivable in bear markets, especially stuff that's aggressive and crowded.
Yeah.
So
Well,
I'm
I mean,
really like full of life today and excitement.
listen,
I haven't.
you're
Wait,
full
hold
of
on.
you're full of
My
that's why we
dog's
have
sleeping
Graham.
behind me.
Graham doesn't mind that it's a bear market. He's snoozing peacefully behind you. Listen, I think that you're being very honest though, and because sometimes patience and being very cautious is necessary, and it's easy to get sort of riled up with a lot of the headlines and big moves and think you see opportunity. And there are plenty of people out there pumping that and pumping their position. So you have to be really careful in this.
Yeah,
And it sounds like
I,
it's
I think
an
that's
environment for the cautious.
I think it's look, if Warren Buffett is just sitting on dump trucks of cash, I think it's probably saying that he's probably telling everybody he doesn't feel that comfortable, uh, putting money into things, and he's selling Apple and Bank of America and some others and things. Uh, but I think he's also getting a yield, and people have been getting yield in this bond market, and maybe the bonds are going to do okay. But I think that will come at a challenge of the equity market. It could possibly sell off. So that's there's risk, Maggie.
There
There's
certainly
risk.
is. And I feel like everyone feels it. That's for sure.
But we haven't broken anything
Yeah.
yet. It
Yeah.
feels like we've been in a bear market, and we're just like 6% off the high on the Nasdaq, and that's not that far. I mean, it just feels horrible for people. I mean, I am I want to beat the market this year, and that's my goal. I want to beat it bad, and I'm not taking too much risk, and I don't really need to, because I think the markets are going to present opportunity. And again, it's really boring, but sitting in cash and watching my P&L, just I still have plenty of stuff that can hurt me or make me money, but I'm being very selective.
Being selective.
So,
We're going to leave it at that. Tommy, it's always so great to catch up with you. We appreciate you.
well,
You keep it
thanks.
real all
Thanks
the
for
time,
having me.
which
Well,
is really important.
thanks to everyone. And if people would like a trial of Hedge Fund Telemetry, they can email me at info@hedgefundtelemetry.com. And I locked my Twitter or X account because it's just too many spam bots, and
Yeah,
I
last minute.
just
You
don't
get a
need
lot
them.
of people. You have a lot of issues with imitation accounts and stuff like that too. I know. I see that because I'm always really
Yeah, it's
cautious.
just a cesspool. But email me. I'll give you a free trial for 10 days or however long you want, and
That's awesome.
we'll go
We
from
will
there.
put that link in the description as well,
Oh,
so that you can all go back and access it if you're driving or somewhere where you can't write anything down. So, not to worry. Excellent stuff. Well, Tommy, we'll catch up with you again soon. And to everyone, great chat. A lot of people are also kind of bracing and a little bit nervous. And
If anybody has any questions or complaints, I sometimes will respond back. I
put them
love
in the
doing
comments,
that.
people. Put them in the comments, and
Put them in the
um,
comments.
yep. And we will. And of course, you can find us and some of the people in the chat, including Blind Squirrel. You can find us on Substack, and we will pass them along to Tommy. But keep the conversation going and let us know what you're thinking about, because we will follow up and we will pursue it if it's something that's on your mind. So we'll be sure to do that. We will see you again. I'm going to catch up with Noel because there is a lot going on in both the macro and crypto. So Noel Atchison, the author of the Substack. Crypto is Macro Now, is going to join me on Wednesday. And we're going to break down what all of this means and where she sees risk and opportunity in both markets because she sits right at the intersection. So be sure to join us for that. In the meantime, everybody, take care and good luck out there.